What it do? What it do? Train the Trader here with another video for you guys. Hope everybody's doing well. Hope I find everybody in safe health, all that good stuff. We here. Switching it up, doing it a little bit different today. I want to start a series on how to grow your investment account from 0 to 15,000. This is part 1, starting from scratch. Now, I know that there is a lot of people who were just like me when I first started, and maybe you've never heard of the stock market. Maybe you have, but heard horror stories. Maybe you wanted to get involved, but you just can't find the time. I kind of equate that as to like lack of information and motivation, but hey, that's a different topic. Point of it is, I know what it's like to start from 0. I also know what it's like to then grow that account to $15,000, and I actually surpassed 20K in my investment portfolio. I'm not ashamed to say that I started at 0. I actually started with what you'll find $500 to open my first brokerage account and fund it with $500. So, spoiler alert, that's part of one of the things I'm going to cover. So, some of the things that I want to talk about. Maybe, like I said, you've never heard of investing. You don't know where to start. Well, I want to talk about that. What's a long-term investment? What does it actually mean to invest long-term? We'll break that down. What the power of investing long-term is, and where do you start? How do you invest your funds to even get involved to buy shares of stock? And how much do you need to start? I kind of already hinted at that. So let's get into it. Let's get into it. First things first. If you've never heard of investing, where do you start? What's the power of it? What's the whole point of investing? So I want to go to a definition right off the bat. What is considered long term investment? Long term investments are any securities that are held for more than a year, generally. These can include stocks, bonds, real estate, mutual funds, and exchange traded funds. ETFs are a great way, for people to start investing when you're not really sure what companies you want to become an owner of. And yes, you do become a partial owner of these companies by owning shares of stock of these companies. ETFs is a little bit different. It allows you to get exposure to several different sectors under one ticker. So some of even what I just said may be Spanish to some people. So let's break it down. The whole goal of long-term investing is compounding. And I know I saw it right here, compounding. The idea that you start with something like $500, if that grows 10% over a year, you now have an extra 50, but you don't lose that 50, it compounds. So when compounding affects, it's taking whatever you're gaining annually or quarterly on a stock. If you're reinvesting that money back into the stock, say through a dividend or just cash that you're buying more shares with, then over time, the value is going to start to multiply. That's the compounding effect. Using both right here, using both a long term outlook and the power of compounding, individual investors can use the years they have between themselves and retirement to take prudent risk. When your time horizon is measured in decades, market downturns and other risks can be taken for long term rewards of a higher overall return. That's the sense of buying low and selling high. But when it comes to long term investing, remember, these are shares of companies that we want to own for years, not just a short amount of time, but years and probably some decades. So, where do you start? We've covered what is investing, We're going to get into how to get into investing as far as brokerages and the power. So let's talk about the power of investing. Everybody starts somewhere. Some people will have $200 to start with. Some people will have $20,000 to start with. Everybody has a starting point. And one thing you don't want to do when you first start investing is pocket watch. Pocket watching is a dangerous game when it comes to your mental state in investing. You definitely don't want to compare your funds to somebody else's, because at the end of the day, it don't matter. So if all you got is $50 to start with 50. If you got 20K, congratulations, don't blow it. That's the game. Right? Just because you have a lot of money does not mean that you're going to make smart decisions with that money in investing. You still need to understand what you're doing, what companies you're buying shares of, and how that's going to affect your overall portfolio in the long term. Okay? So, everybody got to start somewhere. What's the power of investing? Well, I'll tell you. I'm going to check out this Warren Buffett. Now, for those of you who don't know who Warren Buffett is, he's probably the greatest investor to ever walk this earth. This guy has been doing it for years. He grew up in it. This is him right here. His investment strategy. His number one rule, don't lose money. His number two rule, see rule number one. He's a great. So I wanted to pull him up to show you guys the power, because this is what really did it for me. When I was first investing, I had no idea the power of what it can do over time, and what the power of continuously investing and buying shares of stock can do for you over time. So these are Warren Buffett's top 10 stocks that he owns and shares that he owns and the value. So just some of those companies: Apple, Bank of America, American Express, Coca-Cola, Chevron, Occidental, Kraft Heinz, shout out the Patriots, Moody's, Mitsubishi, and Mitsui. So some companies I know people have heard of, some you probably haven't. The main thing is the number of shares owned. Now, this obviously takes a lot of time and a lot of money to be able to do this. But look at this: 905 million shares of Apple, 1 billion shares of Bank of America, American Express, 151 million, Coca-Cola, 400 million, Chevron, 126 million. You guys get the idea. Now, what does that mean? Look at the value of stake. So these shares that he owns actually equate to these numbers. So his 905 million shares of Apple equates to $154 billion, ladies and gentlemen. $154 billion. And some of these companies pay dividends, like Coca-Cola. Coca-Cola pays a decent dividend, but when you have 400 million shares worth $23.8 billion, that's how you get paid a dividend of $127 million a year in dividends. So obviously some numbers that some of us will never see in our lifetime, but just because you can't get to a billion doesn't mean that you can't own 100,000 shares, 500 shares, 1,000 shares. And that money does hold value, as you guys see right here. It is worth money. A share of a company is worth money. That's the main thing that we need to understand. Now, for some people, they don't invest because they're scared. Let's talk about fear real quick. Fear is something, especially as investors, that we have to shake. If you are scared to invest your money into companies that you purchase items from every day, there is a problem. There is a glitch in the matrix, ladies and gentlemen. These companies make this much money, and the value of these stakes are backed by the dollars that Americans and people across the world spend on buying products. So when we're talking about fear of investing at this point, and from what I've learned in my novice career of investing and trading, if you're scared, it's probably because you have some bad information. You have a bad relationship with money, so you don't understand how money works, or business for that matter. And you probably lack a lot of information, which is what's making you scared. A lot of fear comes from lack of information and lack of understanding. So that needs to be tackled in another way. And that's a little bit deeper than this video. But ladies and gentlemen, there's nothing to be scared of when it comes to investing, because look at these numbers. Let's go to a major company like Microsoft. Microsoft, everybody knows of Microsoft. Same way everybody knows of ExxonMobil, everybody knows of what? Amazon, Apple. Most people don't know about Nvidia, but Boeing when it comes to airplanes. Um, we can go all the way down the list. Meta, Facebook, everybody knows about Home Depot, McDonald's. All these companies are investable. And you don't have to be fearful of investing in these companies because you can track their finances. So we can see right here on Yahoo Finance exactly how much money a company is bringing in annually, quarterly. We can tell how much debt they have, net debt, and see if that's increasing or decreasing over quarters or over annually. As you see here with Microsoft, their debt is decreasing annually. So I pose that question to people that are not involved in investing. Why not? Most of the time it's fear based. Fear, like we discussed, or like I just discussed, is from lack of information. Now, what's to be scared of buying shares of a company that is producing billions of dollars? And I say billions, although this looks like millions, right here, all numbers in thousands. All numbers in thousands. So we got to add 3 zeros to all these numbers. So total assets, Microsoft as of 6/30/2023 has $411 billion of assets. You don't just lose $411 billion of assets overnight. So the whole fear and things that I heard when I first started investing from people that were not really involved but kind of heard it from somebody, you don't want to be involved in the stock market. What if it crashes? Well, if it crashes, we got a lot bigger problems, because $411 billion in assets doesn't just crash. It just doesn't. It flat out doesn't crash. And if you've done your research on recessions, we're talking about 30-40% pullbacks or decreases in value, if you want to say it that way, not crashes. Not crashes. We haven't really seen a major crash in my lifetime. So for me, that fear is probably carried on from generations. So it really shouldn't exist in my mind, because since I've been involved in the stock market, I've seen companies do nothing but make more money, buy more things, sell more things, and continue to produce revenue and pay out dividends. I mentioned Home Depot. And yes, I am a shareholder of Home Depot. I'm an owner of Home Depot because it's a fantastic company and has been proven fantastic for years and years and years. Longer than I've been around this earth, and probably longer than my parents have been on this earth. So their total revenue, not as high as Microsoft's, but they're steady. They pay a great dividend. They're actually considered a dividend king, if I'm not mistaken, because they pay a great dividend, and they not only pay a good dividend, but they increase that dividend and have increased how much they're paying their shareholders over the last 30 years. Every year they're paying more. So what's to be scared of? So we kind of debunked that. There's nothing to be scared of. If you're scared, that means you just need to do some more research. You need to ask some more questions. You need to get a better understanding. That's all that is. So where do I invest my funds? Once I figured out and I'm not scared, I'm ready to invest. Where do I put my money? Got you guys. So right here are some brokerages. Brokerages are companies like TD Ameritrade, Schwab, they're basically the same company. They're actually merged already, so they're one and the same. Webull, Moomoo, both of those offer great savings on dry powder, and dry powder is another word for cash. So dry powder is cash. So if you have $500, $1,000, $10,000 in cash or dry powder sitting in Webull or Moomoo, then just by having the cash in there, they're going to return at least 5% annually to that account. I have a Moomoo account and it is legit. They do pay interest on dry powder just sitting in the account. Just a little nugget for you guys. E-Trade's another brokerage, Fidelity's, and there's more, but these are just the ones that I know, bigger ones. Trying not to show bias, but I do use Moomoo myself. They offer great information, great charting, a lot of news on earnings, things like that. So it's really intuitive and user friendly app. And TD Ameritrade is my main brokerages, where I input all my investment account, where I buy my stocks, um, where I trade options. I use TD Ameritrade because they have a pretty good charting platform that comes free with a membership or an account through them. So, one part of investing is where do you put your money? The other part is how do you track stocks? How do you look at technicals? How do you see things like this? This is the Thinkorswim platform that I use to look at stocks every day that I'm trading, or if I'm doing some technical analysis. This is where I do my technical analysis on Thinkorswim. All right. So when it comes to charting systems, these are the best ones. Thinkorswim, y'all, you guys just saw that. TradingView is a really good one, but it's better if you actually pay for it. So they do have a subscription base, like a membership for TradingView that opens up more chart data, gives you live data, things like that. Really good one. A lot of professionals use TradingView. And Lightspeed. Lightspeed is definitely a pro platform, and you do have to pay for that one. And I think you have to have a minimum of $25,000 invested to even open an account with Lightspeed. So that's definitely for the pros. Um, yeah. Now, last but not least, how do you get started as far as money, and how much money do you need to open an investment account? So for me, at the beginning of the video, like I said, I started with $500. That's all I could afford. That's all I was really willing to put into my brokerage account that I could essentially lose and not be worried about it at the time. Small amount, but I was ready to get into the game. Now, this is not options trading. This is not crypto trading or forex trading. You can't really do anything with $500 if you're trading. This is more long-term investing. So $500 will buy you a couple shares of, let's say, Uber, for instance. Another company I love. Uber is currently at $77. So if you have $500, you could buy a couple shares of Uber and get your foot in the door and dip your toes a little bit. And that's exactly what I did. I didn't have the $5,000, the 10, the 20 to put into an account and start buying shares of companies that I like. So I had to start small. And there's absolutely nothing wrong with starting small. The idea is just to get in the game. Get in the game. Get past the fear and the procrastination of wondering what if, and pull the trigger, invest some money, and do some research on some companies to invest that money into. Now, of course, you can go with the big dogs, or you can go with an ETF. Like I said, ones that offer ETFs or the securities that offer exposure to multiple sectors for the price of one. So that's a good way to get started. Or if you really love Apple or you really love Microsoft, then you can get a share of one of those and just start with that. Okay. It is that easy. And you don't need that much money to get started. A lot of people get hung up on just that part of getting started. And that's the main thing, because here's the crazy dynamic about investing. People are so attached to money that they will not even, there's no way that somebody's going to spend some money. Most normal folk are going to spend some money and not know where that money is going. And that definitely takes place when you start investing. You're going to learn more about companies and about investing just by putting your money into the account, because we as people are wired that way. We're going to want to know what our money's doing. And if you don't know and you're really concerned about your money, it's going to force you to learn more about the company or about investing, so you can figure out if you're in a good space or not, if you made a smart decision. So it's a small step, but it's a really big step to begin your investment career, because then you really start learning some information. You learn what a high is, what a low is, what price action is, what earnings is. And these questions will start to be answered just from you being involved, even if it is only for $500 or $200 or $1,000 or $5,000. It doesn't matter. People are going to naturally want to keep track of that money. And that alone is going to force people to kind of take that next step that maybe help them. Okay, I see it's working. You buy an investment, it starts making some money for you. You start to see some return. You're like, oh, dang, I really might got something here. It feels good to put some money in and not have to work to be able to see gains on money. And that's what started it for me. So you don't need much. You need some basic information to get started. The idea is just to get your feet wet. Just get your feet wet. Don't be scared about losing money. Yes, it's long term, so you don't have to worry about the ebb and flow of the everyday market and price action every day. The idea is to buy good companies at a good price, set it and forget it. Start growing your money. Let your money start working for you. And here's the last thing I'll leave you guys with. Something that I applied early on that really helped me grow my account from 0 to 15,000. And it was the idea of paying myself first. So a lot of times when we get bills or when we get paid, first thing that people that have a bad relationship with money will do is they get paid and they go pay somebody else. So they'll get $1,500 from their job that they worked 40 hours for. And the first thing that they do when they get that check is think about what they can go spend that money on superficial things or things that are not going to return any money to them, i.g. food, i.g. birthday parties, i.g. vacations, all these things that we spend money on, clothes, jewelry, cars, all these things that we spend money on that don't return money to us. And we've been doing it almost subconsciously for years. So the idea of spending your hard-earned money in on a stock and just watching it is kind of foreign. It was to me. And that took some getting used to. So the idea of paying yourself first helped me, because this is a little bit of money that's really not going to affect your everyday life, right? So if you get paid $1,500 on a check, the idea is just to pay yourself a small amount of that, 10%, $150. So every time you get paid that $1,500, just take $150 and pay yourself first. Put it straight into your brokerage account, set it, forget it. It's the easiest way to grow your account without worrying about where and how and If you spent your money you're supposed to be putting into your investment account on something else, pay yourself first before you pay your bills, before you pay your friend to go buy something, whatever it may be. If you get into the habit of thinking of yourself as a business and you start paying yourself first, every time a business gets paid, they put a little bit of money to the side, whether it be into R&D, whether it be to an redeveloping product, whatever. It's not just to be put in their pockets, it's to be put back into the business. So we have to think of ourselves in that way. So by paying ourselves a little bit, we work really hard for our money. So we have to be good stewards of this money to be able to get more money. And y'all excuse me if you can hear my dog. He's going freaking crazy. But we got to think of ourselves as businesses. And businesses definitely make sure that their bottom line is met before anything else. So why should we not do the same? And then the money that you invest is not so scary to invest because you're paying yourself. The first thing you need is a job. You got to have a steady job if you want to grow any sort of wealth or riches long term. You got to have a steady means of income. So if you don't have a job and you're trying to get involved in the stock market, just stop. It's a mistake. Don't do it. Just don't do it. You're going to be setting yourself up for a lot of pain emotionally and probably physically when you put your fist through a wall because you lost some money. Just don't do it. Have a steady stream of income, whether it's a side hustle or something. If you got to use all of your main job money for your bills, then get a side hustle, just something that you can pay yourself with. But if you have a job, you really have no reason to not be able to pay yourself consistently, and that will help you start to grow your account from 0 to 15,000. So this is part 1, ladies and gentlemen. We covered, if you never heard of investing, how to do that, what is long-term investing, and the power. Where do I invest my funds? We went over some of the brokerages. I recommend y'all take a screenshot of that, do some research on your own. If you've never heard of these things and you're looking to get involved, do that simple favor for yourself. Invest in yourself, ladies and gentlemen. You can't be afraid to read. There is money in writing. And what I mean by that is news reports in the stock market create opportunities to make money. So simply reading and understanding what you're reading about the stock market or a company is a quick way to be able to learn how and when to capitalize on opportunities to make money. And I'm going to leave it right there at that. I hope you guys got something out of this. Remember, like and subscribe to the channel. Hey, I'm on a journey. I'm just sharing what I know. I'm sharing my experiences, what I've been through. I hope this has been helpful to people. If you got something out of it, give me a like, shoot me a comment, subscribe to the channel. If you didn't get anything out of it, just run it back and listen again because I dropped some gems in here, ladies and gentlemen. I appreciate y'all. If you made it to the end, much love. If you didn't, much love anyway. We up, man. Peace, love, profits. This your boy, Train the Trader, out.